Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are talking about. I may also go into TradingView, do a little bit of ratio analysis, maybe look at uranium, URNM, and compare that to other sectors, see how that's doing against other sectors. We'll probably look at two sectors, URNM, uranium, and GDX, the gold, silver mining companies. Or I should say gold mining companies, because that's GDX. But we'll go through some financial stuff off of Twitter first, and then we can dive into some TradingView ratios second. If you want to follow me on Twitter, it's at finding_finance. And if you want to join the website, it's finding-value.com. I do go over individual stocks and some bigger picture view stuff during our question and answer sessions. We also have midweek updates of what I'm doing, what I'm seeing in the markets with individual companies and the opportunities with those individual companies. Use the word discount in the coupon code if you're interested. So diving in here, we've got Charlie Munger fans. Most people are too fretful. They worry too much. Success means being very patient, but aggressive when it's time. We use technical analysis for this. Technical analysis isn't the end-all, be-all. It's not the perfect solution. But if you can tie technical analysis with ratios, and you can see very low asset prices in relationship to other assets versus history, that is generally when you know something is cheap. And we'll go over a little bit of that with ETFs. This is the uranium futures monthly chart, 60, then 70, then 140 moving averages. And you can see a nice cup type handle there, the gray one there. And we are coming on up for our futures pricing in uranium. It's looking really good. So that's positive there. Very positive. It says uranium spot price breaking out after almost a year of consolidation, and equity prices standing almost or at season lows. Meanwhile, savvy investors, knowing what happens next, take advantage of markets lagging behind reality. So there is the breakout of the uranium futures price. We can see that of this pattern breaking on to the upside, looking fantastic. This is the Sprott Uranium Miners, URNM. There's your support region, and then we're coming up, bouncing off that support region. We are coming up a little bit today to the upside. And then we've got that zoomed in. This is Global X Uranium ETF, also showing that for URA. Very similar patterns there for URA and URNM. We've got UU versus U.UN. So U.UN is the gold price that's starting to head higher here. And then we've got a lot of these other companies that are still way down there. I will say this. Some of the companies have diluted shares, and it's going to drag this lower away from the underlying physical commodity. I don't think that it will make up 100% of that dilution. It's possible it doesn't. Some of these companies have been diluted quite a bit, and I think UU has diluted quite a bit. So that's just an FYI. CCJ, anyone who understands the bullish candle, this is one of insanely bullish continuation candle patterns, if you understand. So these are the big bullish candlestick and then the small little candlesticks going down into it, which then you see usually a continuation pattern to the upside. This is Camco Corporation. Looking good there. We got here, it says, yeah, think things are getting a little out of control. By the way, this number is likely well over 1 trillion right now on a run rate basis. Imagine the rhetoric when the squad in Congress gets a load of that number. The federal government current expenditures and interest payments. Guys, this is beeline and higher. This here is a whole new level, and this could tip us into a highly inflationary problem, is what I'll say. Highly inflationary problem when this goes vertical like that. Deficit spending, as far as the eyes can see. So this is gasoline inventory, continues to draw with inventory below the bottom of the 5-year average. The gray is the 5-year average range. This is where we are at for U.S. gasoline stocks on a weekly basis. We are below the 5-year. So we'll see how far we start yanking this down for inventory draws on U.S. gasoline. Revolution Capital says, anyone pounding the lags thesis needs to look at the housing market. Housing has led every cycle since the 50s. Cornerstone has written exhaustively about this, and housing has more than bottomed. It's accelerating sharply. The lag effect is going to be housing pulling us up. And this is what he's talking about. This is the housing starts, and it's moving on up rapidly here. So that is also looking good. He says, love your white papers, but think you're missing the big picture here. Lumber is destocking, in large part because of weaker consumer R&R demand. The new construction market is booming. See new home sales below, and they will keep getting better. R&R, that's home sales that are moving on up, and he thinks that this is going to continue to the upside. I also think that they will remain quite good for a while, given the demographic and the lack of existing inventory. So with the lack of existing inventory, there's nothing to buy. If you are a buyer, you're going to start looking at new homes to purchase. This is the start of that big cycle that I've been talking about for housing starts. And I know that the affordability is bad. I understand that, but the demographic is big. The imbalances are large. And that's where I think we need to be looking, is at those imbalances. And then we need to watch new homes being sold. That is where I should be for this cycle to continue. I'm going to go over to the uranium, but we'll do some ratios here real quick to see what they're doing. I'm going to start with URNM versus XLE. And to me, this looks very good for URNM to outperform XLE. You got basically some support there. You've also got this guy that's kind of coming down. We haven't broken out of this ratio yet, hasn't broken out, but it looks like it's firming up and it could potentially start to move to the upside. URNM is definitely one to watch here. URNM versus natural gas. Natural gas is out of the world cheap up here, guys. Natural gas, I think, will eventually work its way back lower. So I would say natural gas is the cheap commodity here, at least. That doesn't mean URNM can't go up, but natural gas I do think looks very good. This is URNM versus XOP. You can kind of run through here. Is this a back test of this? It looks like it, and we could be heading higher where uranium could outperform XOP. So that's also looking quite good. You can maybe even throw it up here, somewhere in this range there. URNM versus platinum. Platinum's been on a pretty big run here. I don't know which direction this is going to go. URNM is a leveraged miners product versus the platinum price itself, the commodity. But this does look like it could actually break lower for platinum to outperform URNM. It has to break back above this resistance line for me to think otherwise. URNM versus the NASDAQ or NDQ looks to me like NDQ is favorable, and this could go lower in the short term. URNM versus, this is the commodity index. This definitely looks like URNM could outperform the commodity index. So that looks good there. URNM versus OIH. This does look like URNM could go and outperform the energy service companies. We're right on support. So that also looks pretty good. URNM versus REMX. We're just squeezing, and we'll see which way this thing breaks. We've got URNM versus COPX. To me, this looks like we've broken to the downside. Yes, it could come back up, but that could also roll back over quite easily. We have to basically break back above this resistance line here. URNM versus SPX. You can also draw one across this way as well. That's another support region coming through here. But to me, it looks like we're breaking down against the S&P, and we could go even lower potentially in a longer term view. That's just zoomed in on it, but we're right at support, and we'll see if that support holds for this ratio. One sector that I do want to talk about real quick is GDX. So GDX versus the underlying commodity is very cheap, and it's starting to move to the upside. So that's good. GDX versus REMX, and these are all weekly candlesticks. This looks very cheap, and it looks like it put in a nice little bottom here. We've got a little support resistance line coming through here, and we've broken above that. And I think that we could definitely see a move higher for GDX to outperform. If you look at GDX versus SILJ, GDX is outperforming SILJ. Are we going to get a turn up here? We'll look for a turn where SILJ could eventually outperform. Is that kind of a shoulder head, shoulder-ish type move? We've got GDX versus URNM, and this to me looks bullish for GDX still. Yes, it could pull back, but guys, this still looks, on a weekly basis, this still looks very good for GDX to outperform URNM. We also have a shoulder, a head, shoulder type movement, or you could even say it's like that. Either way, it's an inverted head and shoulders and a breakout to the upside, and I think GDX could outperform. GDX versus XOP definitely looks like GDX is going to outperform XOP to the upside. We've got GDX versus COPX. This looks like it's pretty well balanced at the moment, but we are very cheap in this ratio, and I would say that GDX is favorable for outperformance against COPX. And then GDX versus OIH, we basically broke out. We came back for a retest of this line here, and we've broken out again of this downtrend channel wedge pattern. And it is moving on higher and looks fantastic for GDX to outperform OIH. And the reason I'm showing this is because this is also, it tells us a little bit about the potential market conditions that are coming up. If GDX is starting to outperform everything, and we also can see, I'll touch on this again too, is I'm going to go all the way up here real quick, so just hold on. The TYX-TNX ratio has broken to the upside, and we've got a strong correlation when this ratio goes up that we've got a outperformance of precious metals, especially gold. So gold, silver, and platinum. And I'm still looking for that outperformance over the next year or two or three. We can also have a commodity bull market when this goes up. So you can see that this went up the entire way here. And we can also see that it stays low for periods of time. So the question is, are we going to stay low for a period of time? Is it going to go up? And really what this is this is the curve uninverting. When it uninverts, we enter a different market condition than when the curve is inverting. When it inverts, we have higher interest rates. When it uninverts, we have lower rates. And right now we're going through a period that is going back and forth with rates. So when we look at the 2-year rate, this is the 2-year yields, we can see that we're going back and forth here in the short term. But overall, if you look at kind of a bigger picture view, is this a period where we could come up and go back down here and then start and then head higher again? That is a possibility. And that's a possibility I'm looking for. And when that dives down like that, I think gold and silver and precious metals will do incredibly well during that period. We're chopping back and forth at the moment, but so is gold sitting on top of its big old pattern here. It's just waiting for the right market conditions to come. So I think gold, silver, platinum, doesn't matter what it is, these all are sitting on top of their patterns, and they're not selling off, guys. They're sitting on top of support, and they've got these small little down candlesticks. They look fantastic. All of these different commodities do right here, the precious metals. And if you look at the 2 10-year yield, here's the 2 and 10. We squeezed up to a corner here, broke to the downside with pretty good, force here. A lot of selling. Well, it would be a lot of buying pressure into bonds and an uninversion of that curve. And then we're squeezing up again, and we've broken that to the downside. So let's continue to monitor this. The reason is if we see this move down, it is going to be favorable for precious metals, I think. And you can see what happened last time. We got that kind of big move lower here. We kind of shot lower, and then we had the problem within the markets in 2020. I think something could be coming with the yields setting up like this. And maybe there's something to do with the crisis somewhere. You can kind of see the way that these look like too, and all of these markets. What you see is you'll see a continuous up move, and then you get smacked on the head. You run out of steam. You can see the green days are much smaller than these 2 big red down movement days. And then the sellers, I should say, the pressure to go down in this ratio accelerates. So that is what we're looking for when we see this. We're looking for these large selling pressure days to put in a top. We came in here, we kind of went sideways through here. There's a couple there, but that was premature. 98, we came all the way up in 2000. Then we chucked it lower. I think what's coming is going to be similar to this move here, and then we'll get a big old move towards the end of the bull market higher probably. That's my guess. So I think it's going to be very similar to this entire cycle here. We've already come up. We're located there right now. We're here right now, and I think we'll go down. There's going to be some problem in the market, recession, pullback, whatever it is. But that does not mean that the housing market's going to just crash. It's not going to be the cause of the problem like it was in 2000, 2001. Inventory levels are very low. We could see a big boom in housing, and that could reduce how much this goes down. It could. It may not. We'll have to wait and see. No one knows the future. We're all trying to figure out, based off some of these signals, what the potential future could look like. So that's what I'm seeing in the markets right now. I think gold, silver, platinum still look really good. I think that the market conditions, the yields, and all that stuff support that viewpoint. Could uranium, could oil all go up during these market conditions? They can, but there's increased risk in the markets when looking at that. That's all it's saying. So that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website if you like, and we can go over individual companies. I did see an Eric Sprott interview, and he was name dropping the companies that were in for some of the more speculative gold and silver companies, which I thought is cool. And I'll put that interview on the website so everyone can see it. All right, guys, that's what I've got for today. We'll catch you next time. This is Finding Value.